Finally this evening, the South African rand remained flat in early Wednesday trade with renewed power cuts back in focus. While Eskom has improved plant performance over the past year, load shedding continues to weigh on growth. Investors are also watching for a possible meeting between Presidents Ramaphosa and Trump as trade talks progress. Agriculture, energy and transport ministers are preparing agreements ahead for next week's Washington meeting. Earlier today, the rand traded at 18.29 to the dollar, largely unchanged after weak jobs data on Tuesday. On the local bourse, the all-share index slipped 0.16%, with financials and resources down, while industrials saw modest gains. Market watcher Mshima Gama provides further insight into today's market trends.
It's quite important to know how power cuts in South Africa are affecting the rand. Because this year alone, power cuts took a significant toll on the economy. It's estimated to be as much as 900 million rand per day, which is almost R1 billion a day. And these outages have lasted for as long as 12 hours and sometimes days in some instances. So, power outages are very much a colossal problem for the country. Many businesses in all kinds of sectors, from retail and services to manufacturing and industry, get affected because they lose sales. And to be honest, it's not just about a loss of sales, it's also potential job losses. And in severe cases, these businesses close down. For some firms, spending money on backup generators, which is an expensive alternative to electricity, becomes a necessity, and this reduces the amount that they can spend on more profitable investments. Large industries, particularly mining, which is a cornerstone of South Africa's economy, is definitely not immune to this because power interruptions can halt their production line, which again leads to significant financial losses. Now, according to research from CSIR, which is an international research institution, the total economic impact of load shedding in South Africa over the past 10 years could be as high as 338 billion. And the economic losses due to power interruptions are estimated to cost between 1% and 5% of the country's GDP. Now, to make matters worse, South Africa's economy is already fragile. We're experiencing high and rising debt, low growth, and record high unemployment, which in turn is diminishing investor confidence. So with all this being said, it then becomes pretty obvious why outages affect the rand, because a lot of foreign investors are wary of buying rands in order to invest in South Africa. Now, looking at the rand, it has weakened slightly, trading at 18.23 from a low of 18.08. We've seen a lot of strength in the rand over the past few weeks, and that was merely because the dollar has been weakening. But if there are continuous long outages, we're bound to see the rand weaken, and it's not going to be good just for businesses, but it will also affect us consumers.